Welcome to the Paragon Podcast, a podcast focusing on the needs of high net worth individuals and their families. We discuss the markets, tax strategies, and how to better manage wealth with the goal of living better for today while planning for tomorrow.
Hey everyone, welcome to the podcast, and thank you for tuning in. I'm here with Evan Shorten, firm's founder and principal.
Hello everyone, I hope you're all doing well and enjoy listening to our podcast. If you tuned in to listen and you're not subscribed yet, I invite you to subscribe so you can stay up to date with each new episode. You can subscribe on Apple Podcast app if you're on an iPhone or iPad, Stitcher Radio if you're on an Android device, or you can subscribe to our YouTube channel on most electronic devices.
So today we want to revisit the topic of investing during inflation. We last covered this topic back in July of 2021. However, the economic and financial landscape around the world has completely changed. To give you an idea, last year around this time, interest rates were about 0 to 0.25%. Jerome Powell and the Federal Reserve were telling us inflation was transitory and not a concern. The S&P 500 seemed to be hitting new all-time highs every month, and the U.S. was nearing the end of its troop withdrawal from Afghanistan. 1 year later, and the world looks a lot different. Interest rates are between 1.5% to 1.75%. Jerome Powell and the Federal Reserve have made an open commitment to fight inflation. The S&P 500 has hit bear market territory, and war between Ukraine and Russia has resulted in commodity shortages around the world, which may impact grocery store shelves for some time. With such drastic changes taking place from 1 year to another, it's our job as investors to adapt and to modify. And if you're scratching your head right now, trying to figure out the new landscape, this podcast should hopefully give you something to think about. Or perhaps you might find it better to work with a professional to help you navigate the current landscape. Evan, what are some ways investors could sort of inflation-proof their portfolios?
First of all, I need to remind everybody, we do not give investment recommendations or provide financial advice on our podcast. The podcast is supposed to be informative and give you ideas and concepts to think about, nothing more. That said, if you would like to contact us directly to discuss some of these topics in more detail, please do not hesitate. With that said, I think bonds as an asset class are being overlooked at the moment. Conventional wisdom tells us that as interest rates go up, bond prices go down. While that may be true, it only applies if you sell a bond before its maturity date. If you hold a bond until maturity, you'll still receive the full par value. I'm now seeing new bond issues that are starting to provide investors with yields that we haven't had since before the 2008 financial crisis, especially at the shorter end of the spectrum. For example, the 2-year Treasury is now approximately 3.2% compared to near zero a year ago. If the Federal Reserve keep raising interest rates, as it claims it will, new bond issues are going to reflect those higher rates and become even more attractive to investors.
So it seems that fixed income may be making a comeback in the end?
It's definitely a real possibility, and with yields rising on the short end of the yield curve, it could present interesting opportunities to ladder a bond portion of your portfolio.
Okay, what else?
In July of 2021, we discussed energy and oil, specifically oil stocks, as looking very attractive. At the time, energy and oil stocks were just starting to recover from multi-year lows. While the sector had certainly had a good run this year, I think there is still opportunity. If the conflict in Ukraine and Russia continues, we're going to have prolonged oil shortages, meaning higher margins for the energy sector as prices continue to rise. I know there are a lot of narratives toward ESG and a transition toward clean energy, but the reality is the dependence on oil around the world isn't going to disappear anytime soon. Oil is a component in too many products such as plastics, asphalt, wax, deodorant, soap, and so on.
Another asset class that gets a lot of attention during rising periods of inflation is real estate. Evan, what are your thoughts on real estate now that we're dealing with both inflation and rising rates?
Real estate can be tricky right now due to rising rates. Additionally, real estate as an asset class is very broad. The asset class actually behaves very differently between commercial, residential, multifamily, single family, industrial, student housing, etc. If you can allocate toward multifamily real estate, meaning apartment buildings, that could be a very good place to hedge against inflation. You'll have the ability to increase rents as your costs of maintaining that property go up. Multifamily housing can also be very stable during periods of high volatility when you're trying to preserve your wealth. Unlike a stock or mutual fund, the value of your multifamily real estate is based on what's called the rent roll or the collected rent. It's not as susceptible to movements in the market like individual stocks or mutual funds. The key is to take a value-oriented approach to a hot inflationary environment, such as seeking out opportunities with increasing cash flows, such as real estate.
Okay, and actually, speaking of real estate, I want to piggyback off that and mention one of the best inflation hedges ever created, and that's the 30-year fixed mortgage.
Yes, your mortgage is your greatest protection in the fight against inflation. Even with mortgages being significantly higher this year than last, a 6% mortgage rate is still a good inflation hedge. To give you a quick comparison, Realtor.com reported that rents across the U.S. went up by 10.1% through the end of 2021, with the 50 largest metro areas experiencing a 19.3% increase in rent prices. While not all parts of the country experienced the same rate of rental increases, it illustrates how locking in your housing cost for a 30-year period is the best inflation hedge you can make. 20 years from now, you'll still be making roughly the same mortgage payment, while a renter may be paying multiples of the current rent they pay today. One last investment that I want to mention for periods of rising interest rates and rising inflation is business or entrepreneurship. Entrepreneurs have a lot of flexibility with their income. For example, an entrepreneur can often reduce their tax liability in some years by investing more into their business. Business as an asset is unique in that the tax man actually rewards you for making additional investments. Additionally, an entrepreneur can mitigate some of the inflationary pressure by adjusting their prices. Lastly, an entrepreneur is rewarded for their success. In business, you can grow that business, perhaps cut expenses or streamline your processes and increase profits while reaping the increased financial rewards. I know entrepreneurship is not for everyone. There is nothing passive about this asset class, and you're concentrating your wealth heavily into a single asset. But if you can find success with it, you can offset the wealth robbing effects of inflation throughout your lifetime.
Okay, I hope this episode gave you something to consider. I know we talked about a few different items related to hedging against inflation, and not all of those items pertain to everyone. However, please bear in mind our clients and our target demographic may at times be in the position to invest in assets beyond a stock and a fund portfolio, and our podcast is here to serve as a place for potential ideas rather than provide a how-to. If you enjoyed the podcast or found some value in the content, we ask that you please subscribe so you can listen to our future episodes. If you're worried about inflation, your portfolio, or looking for some guidance, please don't hesitate to contact us. Thank you for listening, and we'll see you here the next time.
Yes, thank you for tuning in. The Paragon Podcast is brought to you by the professionals at Paragon Financial Partners, a registered SEC investment advisor. The topics discussed herein are for informational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The financial strategies and guidelines discussed herein may not be appropriate for everyone, as each individual circumstance is unique. Please review all tax information with your tax professional please review all legal information with your legal professional. If you have any questions or would like additional information, please visit our website at paragonfinancialpartners.com or email us at info@paragonfinancialpartners.com.